I mean, I don't think usually the failures happen at the bottom of the bear market. So if there are a raft of failures, it'll happen at the bottom of the bear market in the same way that FTX, Luna, Three Arrows really failed at the bottom of the market. So I think it'd be a great signal as to when they can start going long crypto when, some of these DATs fail, whatever that means in the DAT context. But the best thing about, at least Bitcoin, Ethereum, Solana, all these, major tokens is that they're, public blockchains that work regardless of what the price is, right? The tech still works. And so that's the point, is we don't have to worry about some central bank of crypto or some dudes and gals, in a private room deciding whether or not they're going to save this guy, fuck that guy. Like, we don't have any of that. And that's the point of crypto. It's like, we don't have to worry about this stuff. Okay, who cares if the price goes down 99% as long as the blocks keep getting validated?
Bitcoin is money without master's trust, less borderless and unstoppable. Arthur Hayes, a seasoned market commentator, uses this framing to highlight why decentralized assets hold enduring value despite market turbulence. His approach to day T participation illustrates the same principle: avoid structures that impose artificial risks, like forced selling, and instead seek vehicles that align with sustainable growth and real yield. For Hayes, the attraction lies in preserving autonomy and resilience, qualities that mirror Bitcoin's design itself. When examining crypto cycles, Hayes emphasizes that true stress tests and failures emerge at bear market lows, as seen with Luna, FTX, and Three Arrows. Rather than weakening the space, he believes these collapses provide clarity, signaling when it is safest to go long again. This perspective underscores his broader point: unlike traditional finance, where survival depends on intervention, blockchain networks like Bitcoin, Ethereum, and Solana continue operating regardless of price. Their durability makes them fundamentally distinct from vehicles like DATs, which remain tied to human decision-making and financial engineering. Looking beyond short-term market mechanics, Hayes shifts attention to the real driver of cycles: fiat liquidity. He dismisses the idea that Bitcoin's 4-year rhythm stems mainly from block rewards, instead tracing it to US and Chinese monetary policy. With global politicians promising more spending without raising taxes, the only answer is more money printing. In this context, Hayes views both Bitcoin and gold as forward-looking signals of fiat debasement. Volatility may persist, but the long-term trend is clear: decentralized money will remain the ultimate hedge against a system built on endless currency dilution. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives. Thanks for watching.
We participated in the pipe, so we were comfortable with the management and how they operated that particular deal. I'm sure people have seen some interesting market actions in some of the subsequent deals of other DAT companies, which we've chosen not to participate in. And obviously the yield, right? Because obviously you want to stack, a creative soul per share at the end of the day, because in 2 years' time, what's going to be the story about DATs if maybe the market's going sideways or what have you? It's like, who's making money? Okay, who doesn't have a particular binary price point at which, if it goes below this level, then they got to start selling or doing some, some things they would rather not do. And I think that's what, made us comfortable taking the plunge and getting into this realm, because obviously we're not really equity folks. We're more pure token people. I don't think usually the failures happen at the bottom of the bear market. So if there are a raft of failures, it'll happen at the bottom of the bear market in the same way that FTX, Luna, Three Arrows really failed at the bottom of the market. So I think it'd be a great signal as to when they can start going long crypto when, some of these DATs fail, whatever that means in the DAT context. But the best thing about, at least Bitcoin, Ethereum, Solana, all these, major tokens is that they're, public blockchains that work regardless of what the price is, right? The tech still works. And so that's the point, is we don't have to worry about some central bank of crypto or some dudes and gals, in a private room deciding whether or not they're going to save this guy, fuck that guy. Like, we don't have any of that. And that's the point of crypto. It's like, we don't have to worry about this stuff. Okay, who cares if the price goes down 99% as long as the blocks keep getting validated?
Why do
mostly it's about, and I don't know how much, maybe Alan has a better idea of what you're supposed to disclose or not disclose. A lot of these are, I've got locked tokens and I think I can get some liquidity today or a multiple on it by putting it into a public vehicle, and maybe there's some tax advantage and all that kind of stuff. And that's really the motivation for a lot of these like tier 2 tokens for doing DATs.
Yeah, it's
really
like
just,
they
VC guy needs to get a DPI in their investment or show that they actually did something. Let me go put this in this public vehicle, slap it on my investor report, and say, please pay me 20%. My essay comes out tomorrow, and my take on the 4-year cycle, the TLDR is like, there have been 3 4-year cycles, and there's very good reasons for them, all centered around U.S. and Chinese monetary policy. I know that there is a technical factor in terms of mining rewards, but I think that is not really the real driver of all this. It just happens to happen at the same time. It's really about fiat liquidity between the U.S. and China. And if we think about like this particular cycle, if we just listen to what the politicians are telling us, and they usually, as up in liars as they all are, they usually tell the truth about some things. And the consistent message, whether we're all around the world, is we will do all these things for people, and we're not going to tax them for them. Whether that's building bombs, it's building factories, it's building houses, whatever it is, taxes are not going up to the level needed to pay for all this stuff. And so it's just all about printed money. And whether it's the Fed or it's the PBOC, it's ECB, or whatever central bank you want to talk about, the politicians are saying, hey, we need cheaper money and we need more of it. And there's various ways of getting to that point, which is why I think Bitcoin and gold, for that matter, are basically telling us the future is more fiat debasement. And so I don't think the 4-year cycle applies in this particular instance, mainly because nobody knows what the world order is going to look like in the next 2 to 3 years, but surely will be volatile, and surely politicians will print money to make sure that people feel okay and vote for them or support them in the political process. So I'm long and strong.
Arthur Hayes argued that U.S. politics will likely trigger a major market shakeout around 2027 to 2028. He suggested that as election rhetoric heats up, the opposition party will promise to reverse existing policies, spooking investors even if nothing truly changes. That uncertainty, he said, could spark a global sell-off across crypto stocks and gold as people rush to take profits and protect gains. For him, the key question in that moment will be how to rotate fiat-denominated gains into assets that can preserve value through the next cycle. Looking ahead, Hayes stressed that every crypto cycle has been different, whether it was ICOs, DeFi farming, or the flood of high-valuation, low-float tokens. The next winners, he believes, will be projects with real revenue and mechanisms to buy back tokens, such as EtherFi Pendle or Hyperliquid, while outdated dinosaur tokens may linger but lack substance. Ultimately, Hayes dismissed obsessing over Bitcoin's exact price, saying the real driver is global money printing. In his view, once you understand how much liquidity politicians are willing to unleash, the path for Bitcoin, Ethereum, and even equities become clear, reminding investors that the fastest horse is the one running on the back of fiat debasement. Let's get back to the interview.
Yeah, I think, at least in the U.S. context, one signal will be sort of the ratcheting up of rhetoric from the opposing Team Blue Democrats in late 27 and starting in 2028, right? Irregardless that they all have the same essential party and they all do the same stuff, it doesn't really matter. It's a popularity contest. Half the country hates one dude, so the people running against him are like, we're not going to do what he does. And then investors are like, oh no, what if they're serious? Maybe we should not own whatever it is that we own at that particular time, crypto being one of those assets. And I think that'll be the start of a massive sell-off in crypto, stocks, golds, everything globally, as people ponder whether or not American, pick your politician, whoever is the opposition party, is serious about trying to run a different policy, even though we all know it won't. But that doesn't mean that the forward changes and people start taking steps off the table, and that causes a collapse in prices. So that's sort of my mental model, 2027, 2028 time period, when I want to be, okay, well, what am I going to buy now? I've made all these great gains in a fiat number. How do I convert it into something real that's going to last me through this next bear cycle, however long that lasts? Every cycle is different, right? The first cycle was, can you pay a miner off to put your money into an ICO? The DeFi cycle was, can you farm Compound and Aave and whatever else the fuck you were doing?
Flip it.
The next cycle was, okay, well, any high FTV low float token, either don't participate or dump that out the open and buy things with revenue. So I think things with revenue, things like EtherFi, Athena, Pendle, Hyperliquid, depending how they do with the fees, Aster, Lighter, all these things, right? if you have money, if you're going to buy back your token, that'll do well. It's not going to be, throw a dart at the wall and XYZ token is going to do well. I think people are already over memes. It's very, very difficult. What new meme has broken out over 1 billion post Trump? Every cycle is different. And when people say alt season, they want it to be as easy as it was in the past, but probably most of those people weren't even participating in the past. They thought crypto was too sketchy. So I think it's a bit of a misplaced nostalgia. Ripple is still crushing it.
Wrote, yeah, they are.
I was at token for 2049. Hoskinson was there holding court. Cardano and adjacent projects had however many square meters of square space. They must have paid millions to the token 2049 organizers. So obviously dinosaur tokens of a particular vintage that do nothing are doing quite well. Obviously I've said $1 million Bitcoin. I think it's possible. I have $100,000 ETH. $1,000 Solana.
I don't know where
you could throw any number out there. It's what is the Chinese GDP going to be? Well, I don't give a fuck what the GDP is. Tell me how much money they're willing to print, and I'll tell you where the GDP is. Tell me how much money you think that XYZ politician is willing to print. I'll tell you what Bitcoin is going to be, or a range. So stop thinking about the price of Bitcoin and start worrying about how much money they're going to print. And I think when you start thinking about it in that way, then everyone feels like, oh shit, I don't own enough of whatever I believe is the fastest horse. Even if you don't believe in crypto, maybe you're a stocks guy. Why are you buying a bond? You should be owning NASDAQ. That's it. Go home. Don't worry about it.
The recurring theme is that political cycles, liquidity decisions, and the relentless debasement of fiat shape the destiny of both traditional and digital assets. Markets may swing violently during periods of uncertainty, and each crypto cycle will favor different types of projects, but the underlying signal remains the same. Those who align with assets that thrive in a money-printing environment will be best positioned. Whether through Bitcoin, Ethereum, gold, or revenue-generating tokens, the hedge against systemic dilution lies in owning what endures when trust in fiat inevitably erodes. How can investors best identify which assets will retain real value during the next wave of global money printing and political uncertainty? So stay tuned for clear data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.